All right, good evening, everybody, and happy Friday. We finally made it through the week. And man, was this a crazy and a very, very wild week on Wall Street. So stocks got hammered, stocks got clocked. Quantitative tightening continues, but it's not just from the Federal Reserve. It is not just from Fed Chair Jerome Powell. We seem to have triggered this perpetual cycle of central banks across the world racing to raise interest rates to protect their own currencies versus the dollar. Now, one of the things that we've been seeing is, yes, the Federal Reserve is trying to raise interest rates here in the United States to help kill inflation, but what that is doing, inadvertently or not, is strengthening that US dollar, and that is putting a ton of pressure on emerging markets. It's putting a ton of pressure on foreign currencies. So what do foreign central banks have to do? Well, they in turn have to increase their own interest rates to help attract investors to their own countries, because essentially what's happening is as US debt becomes more high yielding, US debt is becoming more attractive to the rest of the world, creating a huge liquidity drain to the United States, and demand for US dollars goes up. So we'll talk about that. The Dow Jones Industrial Average, the NASDAQ, and the S&P 500 all falling under intense pressure. The Dow Jones Industrial Average did make that third leg down. So we've been talking about this for probably 3 weeks now. I think the market's going to make third leg lower. The Dow Jones Industrial Average undercut those June lows. The S&P 500 and the NASDAQ both tested those lows, but they did not break below. So we'll talk about, are they going to break below? Is the S&P and the NASDAQ going to follow the Dow? Also, take a look at the action that we've been seeing in the bond market. So that 10-year U.S. Treasury yield at one point today almost got as high as 3.8%. Obviously, we had that late day rally into the end of the day. We'll talk about who may have been buying that U.S. debt. The 2 years at 4.203%. So we have a huge inversion in that yield curve. And lastly, if we take a look at that 30-year fixed rate mortgage, we have reached a record high of 6.55%. That is up about 27 basis points from the same time last week. So team, we are in the office again. We are going to be heading down. But first off, we have to see who we have in the chat, and I hope everybody has had a fantastic Friday. We made it to the weekend, my friends. I see Diego, Vinny Castellano is here, Fred X is here, Austin City Limits. Good to see you, my friend. St. Jib says, hey, Tom, how are you, and happy Friday. I'm doing really good. I just got to put my cup away here. But I trust you guys are doing well. Very busy week, very volatile week, very tiresome week. So hopefully you guys have some pretty nice plans for the weekend. Let's just say that. You know, I will give you guys an update. We're supposed to get hit pretty hard with a Category 3 hurricane on Tuesday or Wednesday here in Miami, Florida. So we probably will not be live streaming through that. But I'll give you an update on that in a minute. Oh, Disney Matt says, Tom, I think the hurricane is going to miss Miami, which would be great. Disney Matt, that would be fantastic because as a New Yorker, I am not geared up for hurricanes. Let's just say that. I am a little bit freaking out, but we'll get it done. No big deal. We survived through Hurricane Sandy. All right, let's see where we got to go. We got to go to number 1. Hey, I see the ABX girl is here, Wendy England. Good to see you, my friend Wendy. I see Robert. As always, guys, we may go out because of the elevator. I see my friend Sunshine After Rain. Hey, Sunshine, good to see you. I see Ryan Royal says, happy Friday, Tom, and all the moderators. Thank you, Ryan. I appreciate that. Paul Lesnar is here. Hey, Paul. Welcome. I see Mohammed. Good to see you, Mohammed. Dusty Cole, Lonnie says, good day, my friend. Good day to you as well. Davy Brewers here says, hi. Good to see you. Sweet country living in Michigan. I'll give you guys an aerial view of the office here. me see if I could zoom out. Well, let me see if I can show you guys. So if we ever have guests or something coming to the office, this is sort of like the guest lounge. I'll show you guys. See if the fish tank is still here. It's the Metro Mover going by. This is the fish tank. I think they took all the fish out of it though. Oh, there's one. Yeah, that's about it. So we'll head out. Hey, Sophie M is here. Good to see you, Sophie. Yeah, Western Mass Dave is like, there's just only one fish. There used to be a ton of them. I'm not sure if they're sleeping or they exchanging them out. Who knows? Lena Sandoval is here. Hey, Lena. Good to see you. Yeah, FredEx, we already got one Metro Mover sighting in. But today was an absolutely beautiful day in Miami. I mean, talk about a picture-perfect day that was today. Probably one of the best days that I've ever experienced being in Miami. And I think that is because this is the calm before the storm, my friends. We are supposed to be getting, oh, so yeah, so this is sort of what the beach, I think this is 72nd Street, or maybe this is South Beach. But yeah, beautiful, beautiful Miami. All right, we have made it. We are finally out of the office. Let me see who we have. We have GX72. Good to see you, my friend. Robert says it's a tropical depression headed towards Miami on Monday. Yeah, Robert, one of the things that is a little strange, they're calling it a tropical depression, but I was watching the local news today, and supposedly by Wednesday afternoon, it should hit about a Category 3 hurricane, and that's pretty serious. So hopefully that doesn't happen. This would be my first hurricane since I moved to Miami, so hopefully that won't be the case. We'll see. Hey, Dusty Coles is here too, Tom, in Virginia. 66 degrees. Yeah, a lot of my friends in New York, Dusty, were saying that it was a pretty chilly day in New York. Maybe only like 65 degrees, which is a nice sort of, I guess, fall-ish day in New York City, which is nice. Hey, John Ellis, a storm headed to Tampa. Yeah, so a lot of the weather models, to your point, John, that I've been looking at, it shows the storm curling. It looks like it's going to clock Tampa, Florida, and then go over and down to Miami. So I don't know. We'll keep our fingers crossed. Hopefully we don't get any hurricane at all. That would be ideal. Because, man, I mean, Category 3 does some damage. So hopefully we won't have any serious damage here. But we'll see. Pray for the best. Hey, Rusty Golfer says, good evening, everybody. Hurricane parties are fun. I mean, the biggest thing that I'm worried about, to be honest, is just losing power. Losing power is never fun. Especially if it's going to be 95 degrees and humid. That's no fun. But look, we'll see. I mean, there's only the only thing I could do. Tomorrow, I'm actually going to rent a car. I'm going to go to Costco and just get like the normal stuff. I'm not going to freak out, but you know, just get some bottles of water, just like basic canned food. I don't really have any of that stuff at the house. So I'll do that, and there's nothing really else I can do. D says you need a backup generator, Tom. So I was going to order one or purchase one. I believe the brand is Generac. I think they're actually a publicly traded company too. But that is yet to be purchased, unfortunately. Disney Matt, good to see you. Great Triff is here. Says hurricane parties are stupid. I've never even heard of the term hurricane party. Maybe I'm a little bit of a newbie. Anyway, good to see everybody. It was a beautiful day in Miami today. Definitely happy it's Friday. I'm going to take the weekend to sort of relax, prepare for the hurricane. But right now we are overlooking the beautiful Brickell Key, and the sunset was absolutely amazing today in Miami. Disney Man says, Tom, do you think that going to Harvard is worth the cost? Or any Ivy League school for that matter, in terms of success and job opportunities? 100,000%. Yeah, I mean, if you're smart enough to go to an Ivy League school like Harvard, Yale, Brown, Cornell, any of those, I would say do it, 100%. Hey, just the guy says Generac is awesome. Generac is awesome, but their stock's getting clocked. I think it's off almost 70% from all-time record highs, but so is pretty much everything else, as the Federal Reserve is going to, really put a vice grip here on the economy, which we'll talk about. Quinn says, I think Generac is made in Wisconsin. I think they are based in Wisconsin. I think you're correct on that. Good to see you, Quinn. Sally is here, says, hey, Tom, welcome. John says, is it a Generac generator? So the one that I'm looking into, yes, it is. And I think in general, if you live in a place that is very susceptible to natural disasters, I think it's pretty appropriate to invest in one. So I will be making that investment for sure. I was going to buy one, and well, long story short, I did buy one technically, but it never came and I canceled the order, but that's a story for a different day. But man, the water seems calm. Disney Matt says, I'm with you, Tom. Top companies always pick Harvard grads versus random state schools. Yeah, so I think in relation to that, obviously it's a very, very expensive college experience, right? Going to an Ivy League school. But I think if you're smart enough to get in, I think what's even more important than the Ivy League education is just all of the connections that you're going to make there. I mean, think about the families who send their children to Ivy League universities, right? You're probably going to meet some pretty important and pretty interesting people. So I'd say if you're smart enough, go do it. I wasn't smart enough. I could never get in there in a million years. But if you are, dude, I would do it. And congratulations on your success if you've gotten in. Sunshine After Rain is here. Says, lovely night, Tom. Good to see you, Sunshine After Rain. Sunny D says, happy Friday, Tom. Stay safe. And hoping the storm misses your area. What a crazy Friday in the market. Curious to hear your views on the upcoming week ahead. Thank you, Sunny D. Ricardo says, hello, welcome. Well, so we are going to talk about that tonight. And so I'm just eating one of those mints in the WeWork building. They give out these mints for free. And I must have eaten like 20 of them. Probably shouldn't have done that, but yeah, I mean, look, this market sold off really, really hard. And on a serious note here for a second, what I'm seeing in the market right now, let's not even talk about stocks. Let's focus on, number one, usually I say focus on the bond market, right? But I think we got to focus on the currency market first, then the bond market. And we've been seeing some really like crazy moves. And I've been talking to some of my friends who've been working on Wall Street and managing money for 20, 30 years. And they're like, I've never seen moves like this. Last night when we did the live stream, although it was a short live stream, I do apologize for that. Last night when we were doing the live stream, that 10-year U.S. Treasury yield was, I think, 3.45, something like that. Today, the 10-year U.S. Treasury yield ripped again. At one point during the day, I think right around 3:30 in the afternoon, it was right about 3.8%. Now, going into power hour, so from 3:30 to 4, you saw some buying here. Now, many people speculate that it was probably the Federal Reserve coming in here and buying the debt, because I mean the sell-off, it was just one way lower today. Everything was pretty much limit down, not literally, but S&P 500 down 2%, Dow Jones Industrial Average cutting below the June lows. NASDAQ testing the lows as well as the S&P. But the bond market was just getting obliterated. The bond market was selling off, and global bond yields were spiking. You saw massive movements in the currency market. The Dixie went from 110 to 113. But, during the close, during Power Hour, like I said, there was actually some buying. But the old saying on Wall Street is that markets do not bottom on Fridays. So I think we still have a ways to go. Hey, Dusty Cole, good to see you. Just the guy says, I think it's oversold. Yeah, well, I mean, to your point, all of the major indices are well below their moving averages, right? So the Dow Jones Industrial Average, S&P 500, and the NASDAQ are all below the 50-day and the 200-day. So we could be setting up for a little bit of a bounce here, but in general, generally speaking, I think the precedent really has been set that monetary conditions are going to get extremely, extremely tight, not just in the United States, but globally. And this has really been causing what I like to say, I guess you can consider like a perpetual cycle. We'll try to cross the street here. The one thing about Miami is there's always 10-minute red lights. It's almost like Long Island. Hey, RS is here. Good to see you, RS. Juan Carlos says, greetings, Tom, from Honduras. Good to see all of our friends from Honduras. Good to see you. So one of the things that I think we're seeing here, as we pass the Wells Fargo Center, we're going to walk to the financial district tonight, is that as the Federal Reserve, because if you think all the way back before this inflationary nonsense, right, before we've had inflation ramping in the United States, interest rates remained artificially suppressed, and the US dollar, especially under the Trump administration, and I'm not using that to be political, I'm just giving you a time frame, has actually been relatively weak. We've had a weak dollar, which has actually been good for the rest of the world. Now, the problem is, ever since inflation really started to take off in the United States, obviously one of the tools that the Federal Reserve has, I'll give you guys a quick shot of the Aston Martin building. One of the tools that the Federal Reserve has to kill inflation is to raise interest rates, right? And if you think about bond yields in the United States, historically since '08, they've been very, very low. And their real rate, so as opposed to their nominal rate, so factoring in inflation, has actually been negative. So as these interest rates have been going up, US assets or US debt has now been more attractive to global investors. So this has caused almost like a liquidity suck into the United States, and it has created this massive, massive dollar rally, right? This is the City National Bank for those of you who are new to the Miami streams. So this has created a huge liquidity suck or liquidity drain into the United States, into the US dollar. But the issue with that is when the dollar gets stronger, emerging market currencies start to melt down in terms of their relative strength to the dollar, if that makes sense. So in order for emerging markets to, number one, fight off inflation, but to, number two, stay competitive to US rates, those global central banks also have to raise interest rates, right? Many times on the stream, and even if you watch CNBC, Bloomberg, or you read the Wall Street Journal, oftentimes the main key focus is only on the Federal Reserve. And I think it's like that because the United States is the biggest powerhouse, biggest global economy. But I think we need to be looking at this from a more macro point of view and watching what other central banks are doing. Now, to sort of finish my point, what this has created is a never-ending cycle almost. It's created where if the US raises rates, or if the Federal Reserve raises interest rates, well then the ECB needs to raise rates. The Bank of England needs to raise rates. The Canadians need to raise rates. Switzerland needs to raise rates. And what that does is it just creates continuously more tight monetary conditions, not only in the US, globally. and pushing up the strength of the US dollar even more. And we have creating severe liquidity crisis, not only in the United States, but globally as the demand for dollar rises. So we'll have to keep on that. Hey, Andy is here from South Korea. Good to see you, Andy. I trust you're well, my friend. Happy Saturday. I think it's Saturday already in Korea. So good to see you. We are going to be crossing over into the Brickell neighborhood and maybe walking down to the financial district today. I see Billy says, hey Tom, you think that news of China's President Xi under arrest is real? I didn't see that. I actually didn't even see that news. Did that just break? I didn't even see that. I'm actually very intrigued now, Billy. Hey, Daryl says, Tom, stay safe and careful, my friend. Thank you, Daryl. I appreciate that. I appreciate that very much. Wendy says, we are raising rates as fast as we can. You know, there's two anomalies, I would say. Now, consensus is everybody is raising interest rates, or central banks globally are rushing to raise rates. But there's actually two glaring anomalies. And number one is the Bank of Japan. And number two is actually in Turkey. And I think that is why you're seeing, even now, the Turkish lira is melting down to new all-time record lows now. I think the latest inflation print for August in Turkey was 80%. So you would think if you have 80% inflation, instead of cutting interest rates, you would raise rates. But who knows? So those are really the only two economies that are cutting rates, actually doing the opposite. So making monetary policy a lot looser. Hey, 61 is here. Good to see you, 61. Welcome. Hey, 61 says, Tom, I'm late to the stream. I was putting gas in the car at Costco at Miami Lakes and the lines were long already. Yeah, that's making me a little bit nervous. We're supposed to get a pretty decent sized hurricane on Tuesday and Wednesday. Supposedly it's going to be a Category 3 hurricane. And this will be my first hurricane in Miami, so we'll see. Chris Beeman says, hey Tom, good to see you, Chris. Trust you're well. Chris is joining us from the one and only Arizona. Welcome, Chris. Hey, Ricardo says, I think stocks are close to getting more pessimistic. Well, I think investor sentiment is very pessimistic. Now, we've sort of talked about this before, Ricardo, and I think it's very interesting and it's a very good point that you bring up. Now, investor sentiment is at all-time record lows, but the problem is they're not expressing that with action. So what do I mean by that? We're actually overlooking the W Hotel and Tower, so you guys know. So the problem is investors are not expressing that view via action. And one of the ways we know this is by looking at the CBOE volatility index. Oh, look at this guy on this bike. It's like a double lifted bike. So when we look at the VIX, or the CBOE volatility index, we're still not at those egregiously extended levels that we tend to see at market bottoms. Now, if you are following me on Twitter, you can follow at Walks Wall Street. I actually posted a chart of the VIX today. The VIX finally started to get a bid today. We were up about 14% to about 31 on the VIX, which is headed in the right direction when we want to see some sort of, a relative bottom in the market, maybe a temporary bottom. But generally speaking, in order to see, I like to say, a generational bottoming opportunity in the market, the VIX really has to get up there into like the high 60s, 70s, or even 80s. So if you guys go to tradingview.com, it's a completely free piece of trading software. Again, it's completely free, you don't have to pay for it. and pull up a chart of the VIX and put it on a monthly time frame. And this will give you a pretty good idea at the types of levels the VIX had reached in the past when we saw major market bottoms. And notice where the VIX was at during 2020 with the C-19 crisis. Notice where the VIX was at in 2018 when we bottomed on Christmas Eve. And also notice where the VIX was at in 2008 at the bottom of the great financial crisis. So the building that we're looking at right now is the Aston Martin building. It's one of my favorites here in downtown Miami. We actually have a plane taking off from Miami International. Hey, Golden's Dawn says, love the look of this view further down the river. Good to see you, my friend. DWG is here. Welcome, welcome. Just Barry, good to see you. David Stubbs says, please stay safe, Tom. Thank you, my friend. I will do my best to stay safe. Hopefully the hurricane will just turn the other way and just dissipate. But I have a feeling we're gonna get hit pretty hard. John says, Tom, I have a question for you tonight. Well, I'm ready. Hopefully I have an answer for you tonight. Good to see you, John. Ollie Jade says, are you prepared for the hurricane? As of right now, no, I'm not prepared, to be fully honest. Tomorrow, I'm actually gonna rent a car and go to Costco. I'm not gonna go crazy. It's not like I'm gonna buy 20 gallons of milk like some of these people do. I never understood that. Whenever there's like a major storm, so I'm from the Northeast, I'm from New York, so usually anytime before we have a major snowstorm, everybody automatically rushes out to Trader Joe's and buys like 30 gallons of milk. I mean, what are you gonna do with 30 gallons of milk? The snow is gonna melt in 2 or 3 days, and you're just gonna be stuck with 29 gallons of milk. So I never really understood that thought process, so who knows? I'm just gonna get some regular stuff. You know, maybe canned goods, 2 loaves of bread, some eggs, things like that. Also, a little bit of a life hack here. I will be buying charcoal, so if the power goes out, I have an electric stove. If the power goes out and I can't cook, I'm just gonna cook on the charcoal grill. Yeah, Harry Connor says Spam is also a good hurricane food. That's true. Like the canned meat, things like that. You're right. Hey, Lila is here. Good to see you, Lila. Man, that guy was going crazy fast. The ABX girl says, Tom, I remember New York City hurricanes. We taped our apartment windows. So I have these so my house is from the 1950s. So my house is really, really old. And it's good and it's bad. It's good in the sense that the entire house is pretty much just a solid block of cement, right? It's just like a big slab of cement. So I think I'll probably be fine. I'm not in a flood zone. My block has never flooded. This is a nice Tesla. So I don't think I'll have any of those problems. Now, my windows, I don't have hurricane-proof windows. I have the original windows from 1950, probably 1955, but on the windows I have these really, really archaic-looking hurricane shutters. So they're full metal, and you just slide them across. So I think I'll probably have to figure that out because some of them are extremely rusted, especially the ones in the back. But we'll figure it out. We'll figure it out. Hey, Manthony18 says, don't worry, Tom. I experienced the Category 2 hurricane in Panama City. You just need to hunker down and ride it out. Yeah, I think you're right. You know, I was down on Long Island to help with the cleanup of Hurricane Sandy, and that was just really, really just the damage that was done there was insanity. But Hurricane Sandy wasn't so much the wind and the rain as much as it was the storm surge. So I'm not sure if a lot of people here are familiar with Sandy, but it really technically wasn't too bad, like walking around outside in it. The problem was the massive storm surge, where you had massive flooding, which was just horrible, devastating. So as long as we don't have the storm surge here in Florida, I think we'll be all right, but I'm just not really used to the 100-mile-an-hour wind. Hey, Dan Zhang is here. What's up, Dan? Good to see you, my friend. Says, I love the fact that you pointed out the Tesla, but totally ignored the Porsche and the Lambo. Yeah, I don't know. I'm a big Tesla guy. I don't really drive, but I think if I had to buy a car, it definitely would be a Tesla. So now we are walking down the main Brickell Avenue here, which is, I guess you can consider it the Wall Street of Miami. Right here is the Bank of America Tower, Merrill Lynch. I'll give you guys a nice view up here. Hey, Western Mass Dave says, we really don't know the possible outcome this early. Don't underestimate it, Tom. Yeah, so what I'm trying to do is mentally prepare myself to overestimate it. Now, here's one thing I've always sort of noticed a pattern. And obviously this is probably very, very anecdotal. But anytime the weather people go insane and they freak out over a big storm, the storm is usually nothing. But when they say the storm is going to be absolutely nothing, that's when you really get hammered. So, I don't know. I'm probably going to get just like a week's worth of food. I think that's not overblowing it. I think that's normal, right? Because what if the power's out for, 5 days? We'll see. Hey, Buff20 is here. Good to see you. Nirvana Fan 500 says, aren't Teslas poorly made, especially for their price? I know nothing about cars. So in full honesty, I don't really know anything about cars either. I've heard a lot of those complaints, especially as it relates to the steering wheel. So if anybody has bought like a new Tesla Roadster or like a Model X or something, supposedly the steering wheels like rip apart within a matter of weeks. That I don't know, but I don't know. I like the look of them, and I just am really a big fan of Elon Musk. So everybody, I think the one thing I just wanted to make a note of here is that if we sort of play this, like do a play-by-play, and as I say this, I want to show you guys these two brand new high-rises that are going up. These are going to be the super talls here in downtown Miami. Not downtown Miami, excuse me, Brickell. But to slow growth and reduce inflation, the Fed must typically push real rates well into positive territory, okay? So if we sort of take it line by line and understand what that means, as of now, the Fed chair, which is Jerome Powell, he believes that inflation, and this is excluding volatile food and energy. So excluding volatile food and energy, Fed Chairman Jerome Powell thinks that inflation is roughly about 4.5%, so 4.5%. So if let's not argue, let's just assume that he's right, okay? It's probably a lot higher than that. I think everybody agrees that inflation is probably a lot higher than 4.5%, even if you exclude very volatile food and energy. But let's just say he's right, okay? Let's give him the benefit of the doubt, and let's say that Fed Chair Jerome Powell is right. If that's the case, the Fed funds rate is going to have to go to at least 4.6% in order for real rates to be zero, right? Because one of the things that Fed Chair Jerome Powell said during the speech is that we really want the yield curve to be in the realm of, positive real rates, so factoring after inflation. On the other hand, think about what he also said. He said specifically that they believe that inflation is going to come down to 3.1% by this time next year. Well, the math really doesn't add up then, does it? So if the math were to add up, that would mean the Fed would have to, at the next meeting, is going to have to hike at least 100 basis points for that math to add up, right? Because right now, the Fed funds target rate is about 3% to 3.25%. So here's what I speculate. There's a lot of money managers on Wall Street, and to give Fed Chair Jerome Powell credit, he did note this as well in his speech, that a lot of the inflation that we're seeing is caused by all of the supply chain disruptions due to COVID, right? And I think everybody could agree with that. So maybe to make up for that delta, the Fed is putting a lot of credence or a lot of weighting that hopefully, well, this place is really interesting, that hopefully as supply chains heal themselves, that'll help inflation come down without having the Fed to raise rates even more than they already are doing right now. Which I think there's no guarantee to that. Right? There's no guarantee that supply chains heal enough to bring down inflation, especially due to the fact that China is still really hammering hard on their zero COVID policy, disrupting supply chains even further. Now, we've talked about this almost ad nauseum on the streams that yes, the United States is trying to domesticate those supply chains by building manufacturing facilities in the United States and shifting manufacturing capacity away from China. But that all takes time. It's not just like you flip a switch and it's done. So I think there's going to be one of two outcomes here. Number one, we have a Hail Mary and supply chains heal themselves, which I hope they do. But as we've been going through Q2 earnings season, all of the CEOs of these publicly traded companies have essentially been saying that supply chain woes are persistent. Oh, let's see who's playing here. I think Argentina is playing. I'm not sure who the other country is. Does anybody know? Looks like Argentina and something else. Hey, Bit of Wander, what's up, man? Or the second alternative is we're going to get a very, very big surprise rate hike to the tune of 100 basis points at the next meeting in order for the Fed to sort of stay credible and aligned to what they have to say. And I think that could push the S&P 500 markedly lower. Hey, NYC Duds says, greetings. Any thoughts on what the UK is doing with cutting taxes and invoking trickle-down economics? Sterling got obliterated today. Yeah, so I think all major currencies versus the dollar got absolutely obliterated today. Now, I'm not too well read up on exactly what they're doing in relation to cutting taxes. But what I think Europe in general is doing is they're scrambling to stimulate the economy. Because growth, if we compare it to the United States, so Fed Chair Jerome Powell revised down his estimates for GDP growth in the US to, I believe, 1.2% next year. If that materializes, that would be substantially below trend. And that would probably mean Europe wouldn't grow at all, if not just to be an abysmal disaster. So I think they're just trying everything they can to stimulate without having to cut rates, if that makes sense. Because what we were just talking about on the stream, which is what I like to call the perpetuating cycle, is that the main problem here that I see is that the United States is having to fight inflation for the first time in a long, long time. Think about it, seriously. Inflation has actually been relatively, and I get we could argue till the cows come home about what the real rate of inflation is, I get that. But let's just assume the Fed is correct in their calculations. So historically, since 2008, we haven't really had inflation bump over 3% in a year. And so that allowed us to do extreme quantitative easing, because if inflation wasn't ramping, we could just do quantitative easing in perpetuity, which essentially bond yields remained very, very suppressed. And in turn, the dollar was actually relatively weak. Now, the problem now is that the Federal Reserve has to start fighting inflation because inflation is ramping in the United States. And one of the ways that they fight inflation is by raising interest rates. But when you raise interest rates, global investors around the world are like, oh my gosh, check out all this high yielding American debt. It hasn't been this high yielding in decades. So it's causing like a liquidity suck from all over the world. So when you have the 10-year US Treasury, oh wow, this place looks really nice. Maybe we'll walk down here in a minute. But supposedly Citadel Securities is going to be right around here, the new building. So what you have is, you have the Federal Reserve raising rates. And when the Fed raises rates, that makes the dollar go up. Because global investors are like, wow, I could get a little bit more bang for my buck in the United States. The problem is when the dollar goes up, it obliterates a lot of these other emerging market currencies and emerging market companies in general, because they have a ton of dollar denominated debt. And if their native currency is being obliterated, well, all of their dollar denominated debt just became that much more expensive. So in turn, that forces central banks around the world to continue to raise their own interest rates to protect their own currencies, right? To sort of stop the flight of capital. But it's almost like we're in this never-ending perpetual cycle of extreme tightening, and it's sucking liquidity out of all markets, and you're seeing that in the action of the debt market. I mean, these are not normal moves, right? The 10-year US Treasury yield today, at its highest point, was 3.8%. Now, granted, it did come down a little bit during the day, or at the end of the day in power hour. I think probably because the Fed stepped in here and started to buy it, but I think we're going to face a very, very bad liquidity issue. And I really don't know how it's going to unfold, to be quite honest. Dub says Europe is also facing an energy crisis right now as well, Tom. Heating costs in the United Kingdom will be through the roof this winter, I believe up 80%. Jeez. Yeah, I mean, I think you're right about that as well. Really quick, to piggyback off of that NYC dub, did anybody see the news about, I forget which country it was. There was just so much action going on today, but they're shutting down another nuclear power plant right as we are headed into winter. I forget which country that was, but they had to shut it down. There was nothing wrong with it. It was producing a ton of very good, clean energy. But due to all these new ESG requirements, they had to shut it down. And it's like, guys, do we really need to be doing that when we're in a global energy crisis and we're going into winter? Anyway, I think you guys know my frustrations with that. Hey, Nirvana Fan 500 says, hey, Tom, correct, I'm from England and his country is an absolute mess. Oosh. Yeah, I mean, look, at the end of the day, I will leave the stream off on an optimistic note, but I think we do need to be realistic and watch this, because for those of you who are managing money, and some of you email me and say, hey, I'm running this small family office, I'm running this small hedge fund, and you guys bounce ideas back and forth off of me, which I appreciate. I think that it's not appropriate to fight the Fed right now. I think Fed Chair Jerome Powell was very direct in his verbiage that unfortunately there's going to be no potential way to achieve what they call a soft landing. And I forget the exact quote that Fed Chair Jerome Powell said, but did anybody notice sort of what he said in relation to that soft landing type of comment? He's like, there's no way out of this without any pain. He said something along the lines of that. He's like, I wish there was a way to kill inflation without having anybody go through any pain. He's like, but that's just not possible. So if you sort of think back to what happened in the 80s, right? When they sort of tapped Paul Volcker on the shoulder to say, look, you got to freaking clean up this mess. He's like, sure, I'll clean it up. But unfortunately, in the process of cleaning it up, wow, this is a really nice building. I don't think I've ever been here. Let me see. In the process of cleaning up, rates went to 20% and unemployment went to 10%. although inflation did come down. But so let's see what this is, everybody. I don't think I've ever been down here. Usually I don't come this far down. NYC Dubs, says Tom, a recent poll in the UK last week saw 1 in 4 families will not put the heat on this winter due to the costs. Yeah, and I sort of don't want to go on a big ESG rant, but I feel like I may have to, but I'm going to bite my tongue for now. I think you guys sort of know where I stand on that, because at the end of the day, a lot of the, like, look, everybody wants cleaner environment. I'm all for that, but I think we need to do it in a way where it's not going to put a lot of people in harm's way. You know, anyway, I'll digress on that. I'll bite my tongue a little bit. Hey, Strider 1239, is Jerome Powell watching Rocky 3 and quoted Mr. T for his speech? Good to see you, Strider. So this big vacant lot here, right on the corner, is going to be where the new Citadel Securities office will break ground. Right now, they are in my WeWork office. I actually wish I could have showed you guys. Hey, what's up, man? Hey, good to see you. Right here. I think they're going to build it right here. I guess it's a pretty nice place for it. Sweet country living in Michigan's is no rats in Miami. Yeah, I haven't really seen many rats either here. Although there's a ton of stray cats, like I'm talking about like hundreds of stray cats, literally. Michelle K says, good evening, Tom and everybody. Have a good weekend. Hey, Michelle. Trust you're well. Thank you for being here. Yeah, Jay says, Hurricane Andrew ripped the crap out of everything. I'm a little nervous, not gonna lie. A little nervous. But at the end of the day, I can't worry about things I can't control. If we get hammered by this hurricane, I mean, I can only do the things that I can control, which is just sort of close the hurricane shutters on my house. Double Eagles says, Volcker helped create the mess that he had to clean up, just like Powell helped create the mess that he is now trying to clean up. Yeah, I mean, Double Eagle, I never really thought about it like that, but I think you're 100% correct. Although I would like to maybe stick up for Fed Chairman Jerome Powell a teeny bit, and the only reason why I say that, oh, there's no light stoplight here. I actually have to cross. I think it's a stop sign. I'm not used to that. But then again, I don't really trust the drivers down here. Now, I know it's easy to sort of dump on Fed Chair Jerome Powell. But at the end of the day, I think the fiscal side of the house needs to bear some responsibility as well. And, you know, sort of being, I guess, apolitical, not political here. If you look under COVID, what happened during COVID, right? The federal government spent a ton of money. Now, I don't really want to go into the debate whether it was necessary or not. I understand it was a very, very unprecedented situation. But you can't print trillions of dollars and give everybody, you know, Trump bucks and Biden bucks and expect inflation not to rip. Now, I don't think that is an irrational statement. In my view, it's not. So I don't think the brunt of the bear is all Fed Chair Jerome Powell. Now, do I think they kept monetary policy extremely loose for far too long? Yeah, I do. And I've actually been very outspoken. I actually tend to be one of those end the Fed people. But at the end of the day, what I realized as I've been, I guess you could say, getting older. I guess I could say that. Wow, I've never been here, guys. Check this out. This is insane. I've never been here, and I've lived here for about a year now. Look at this view. I lost my train of thought. Yeah, that happens on Fridays sometimes. Oh yeah, that's what I was gonna say. I tend to be one of these end the Federal Reserve people, I do. But at the end of the day, it's never gonna happen. No, the Fed is never gonna be ended. So it's sort of like you have to adapt to your environment, no matter how crazy it is. So I think what caused all of this mess and all of these exacerbated boom bust cycles is the Federal Reserve and all this money printing. And I would even argue that it's created this massive wealth divide in the country, which we've talked about many, many times. But I think I agree.
Chat.
Oh, nice.
You do YouTube?
Yeah, we do a live stream. It's called Walks in Wall Street.
Walks in Wall Street.
Yeah.
What's it about?
So I'm back and forth between New York City and Miami, and we just, after work, we walk around and talk about like the financial markets and things like that. Yeah. So it's we're usually on at like 8:30. We go for like 2 hours, just like quick recap of the stuff during the market. But yeah.
Okay, that's what's up.
Yeah,
So,
it's cool. Yeah, I moved
do it
here.
full time?
No, it's just something I do after work. I'm here about a year. I just moved here like last year, but I love Miami so far, man. It's awesome, dude.
That's what's up, man.
Yeah.
Shoot ya. I'm gonna follow you on IG.
Yeah, so we're on YouTube at Walks Wall Street. You could just
Walks Wall Street.
yeah, just join whenever, and I'm always around, so I'm always around at this time.
Word.
Hey,
I'm
what's your
skateboard, bro?
Oh, skateboard bro, nice. I skate a lot too.
Word. All right.
Good to meet you, man.
High five.
Sure. Have a good one. Have a nice weekend. That's a nice guy. Yeah, but in general, I understand that Fed Chair Jerome Powell has sort of created the monster that he's now trying to stop. And unfortunately, when he's trying to stop this monster, it's probably going to put a lot of people out of work, but we'll see. Hey, Teresa Diaz. Good to see you, my friend. So really quick, everybody, if you look all the way into the distance, I'll try to zoom in. This is actually the Mandarin Oriental Hotel. And this is the southernmost part of Brickell Key. Now, Brickell Key is fantastic. It's a beautiful place. The only drawback here is that it's rather secluded. I'm not sure how well it comes out on the camera, but there's only one bridge to get to Brickell Key. There's no metro mover, there's no train, there's no nothing. So it's sort of like, I don't know, a little bit too far away from the action, so to speak. But this is a very, very nice 5-star hotel, the Mandarin Oriental, which we actually live stream from at the now Deutsche Bank Tower. But check out these apartments here overlooking the bay. Fantastic. Iris Lewis says, can we see any dolphins tonight? I don't see any, to be honest. What about you guys? Usually we see the dolphins over near the FTX arena on the other side. But it's a beautiful night here. I think it was Tuesday evening. No, excuse me, Thursday. Wednesday. I saw a monster. Like, this thing was massive, the size of this sea turtle that was right outside of the W Hotel. So as I was on my lunch break at work, this sea turtle almost didn't even look real. It was like insane. I think that's probably one of the cooler pieces of wildlife that I've seen. Also, the manatees are also beautiful. Sonny D says, what do you think about Ford wanting to make 2 million EVs per year by 2026? Yeah, I mean, I think I tend to be more of a trend follower, right? So there's many people that'll argue that, you know, a lot of this push towards EVs and things like that is not what we should be doing. But I actually think that whatever the government's going to incentivize is going to happen. Right, whether I agree with it or not, right, whether I think the infrastructure is in place for it or not. So we did a stream about the Inflation Reduction Act. And what I said, sort of my thesis on the Inflation Reduction Act is I don't have to agree with it. I could think the entire thing is nonsense, but the money is going to be spent anyway, and there's nothing I could do about it. So as an investor, my job is to position myself best as possible for what's going to happen. And I think there's going to be massive amounts of subsidy that's going to be thrown at EVs. And I think that's where much of the alpha is going to be generated. I have a feeling that, and a lot of the solar renewables, whether you like it or not. So that's sort of how I think about it over the years. FredEx is like, Tom didn't acknowledge the dog drink. Yeah, FredEx have been super focused today, man. Double Eagle says you could see Dolphins on Sunday when they play the Bills in Miami. Yeah, hopefully the hurricane won't hit. But yeah, I think this is it. Supposedly this lot, which is now a parking lot, is going to be the massive, super tall Citadel Securities office tower. Now, Citadel Securities is leaving Chicago, Illinois for multiple reasons, moving down here to Miami, Florida. But what a lot of people don't know is that even though, yes, Citadel is moving down here to Miami, they still have a huge workforce in other cities. So it's not like all of their employees are going to be here, right? There's a ton of Citadel employees in New York City, tons. So it's not like everybody's going to be here. But I think sometimes the media could, you know, just poke and prod to maybe get a political uprise about it. Hey, Business Mail is here. Good to see you, Business Mail. Welcome. Hey, Carlos says I lived right there at the Mark. Love that building. Hey, so this is the Mark right here. Man, you must have had an amazing view. Was your apartment facing the water or were you facing the city? Yeah, I mean, we really never walk over on this side on the stream. We're usually always near Mary Brickell Village, I guess you could call it, but this looks really nice. The streets are really clean. Love the palm trees. The balconies look amazing. Now check out this building here. This one is absolutely massive. Could you imagine living on one of the top floors here and having a crazy view? You could probably see all the way to South Beach if it's a clear day, assuming. Hey, Carlos says, Tom, I was on the 17th floor facing the city. Nice, man. Awesome. Now, you don't have to answer this, but how much was your rent? Curious, at the Mark. I'm assuming that if you moved out last year, the rent's probably doubled because a lot of people from the Northeast, not even really only from the Northeast, but everybody has sort of, especially during COVID, has been crowding Southern Florida. You know, one of my friends that is a native to Miami, he now lives in Soho. He said, you watch after this hurricane passes through, he's like, all of the Northeasterners are gonna come crawling back to New York and Boston after one hurricane. So this is the Hyatt Centric. Never been here, but this place looks fantastic. I guess every single hotel unit has its own balcony facing the water. Hey, Mike C says, Tom, I was surprised I only paid $3.29 for gas today, only. Yeah, well, crude oil got hit hard today as well. Ooh, jeez. Crude oil got hit extremely hard today as well, which is actually good. I think we're trading well under $80 a barrel for the first time in quite some time. So could the Fed be overdoing it? Maybe. Maybe. You know, to look on the bright side, so I think I spent the first hour of this live stream being rather negative, but, ooh, that's a really nice husky. My sister has the same, literally the same exact dog. Beautiful dog. Another Tesla here. I think his gas cap is open too. Gas cap, did I just really say his gas cap on the Tesla is open? The cap where the, the charging port goes in. Anyway, so one of the, I've spent the first half of the stream being rather negative, talking about this global debt sell-off, bond yields spiking, liquidity issues, stocks getting hammered. So maybe we could spend the next 20 minutes trying to look on the positive side of things. Now, I don't like to just be positive to be, sort of like an airhead. I think we need to be realistic. So this says the Panorama building. This building looks insane. But obviously during every downturn, right? If you think about the way I like to think about the equities markets, right? Let's say the NASDAQ, the Dow Jones Industrial Average, and the S&P 500. I think the NASDAQ is down about 30%. The Dow Jones Industrial Average has undercut its June low. So I like to think about it like this. Think about it like a massive coiled spring, okay? And that spring, the further it goes, the further it stretches. And there's going to come a time, maybe it's in 2024, maybe it's in 2025, where the Fed sort of takes its foot off the gas. And that time will come. Oh, check out this lobby here of this building. And when that time comes, and when we start to have a little bit more of an easy time in relation to monetary policy, this market is going to take off, and it's going to rip a lot of people's faces clean off their bodies. And it happens time and time again. If you think about the S&P 500 on a forward PE basis, I think we are now at a 15 times forward PE on the S&P. And that's actually well below historical trend. Now, I don't like using forward PE as the only valuation metric. And the reason for that is because the E in PE is subject to change, especially if earnings estimates come down and companies start to bomb earnings. It could come down materially. So this 14 times forward PE could actually be more along the lines of maybe an 18 or a 20. But assuming all is said and done and the earnings revisions that have since been revised are actually accurate, let's just assume that those projections are accurate. On a historical basis, the S&P is cheap right now. Now, I understand the argument that earnings revisions could even come down even further, and I get that, and I actually think they may. I understand. But assuming that that's not the case, and that corporate earnings will remain intact, this is actually a pretty, let's say if you are in your 20s or in your 30s and you're going to retire in 30 or 40 years, anytime you buy the S&P 500 below a 16 forward PE, 100% of the time you're... Oh, they're talking to them, not me. I thought he was saying boss. I thought that guy was like boss. Usually when people call, I don't turn around, but I was a pretty forceful boss. So I was like, all right, what does this guy want? Anyway, usually when you buy the S&P below 16 times forward earnings, 10 years later, you always have a positive return. Always. So that's on the bright side of things, assuming corporate profits don't deteriorate anymore. So look, let's say if monetary policy starts to ease up in 2024 or 2025, there's going to be so many opportunities in this market that I think it's going to make more people money than it made in 2020 with all of these, when we had a lot of this COVID stimulus. So that is the positive news. Hey, Zozo Bob is here. Hey, Bob. Blue 72 says, Tom, I dumped my stocks today and I invested in land. So where in, what state or what piece of land did you buy? I think this is the tallest apartment building in Miami so far. Hey, Road Dog 42, welcome. Thiago. This is hello from Brazil. Welcome to all of our Brazilian viewers. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We tend to do these live streams between New York City and Miami. Whoa, check this out. It says monthly parking special is 97 bucks. This would never be possible in New York City. A month, $97 a month to park? That is ridiculously cheap. So back in the day, I'll tell you guys a quick story since it's Friday. So back in the day, one of my early teenage jobs, I was working in New York, and I was in a parking garage. And our parking garage back in 2015 would charge people over $400 a month to park. I can only imagine what it is now. So if you have a car in New York City, after paying all your rent, after paying all these crazy expenses, then you have to pay $450 a month just to park your car. How crazy is that? Assuming you park it in a parking garage. So $100 a month for parking is an absolute steal. That's awesome. Hey, we have somebody who says watching from Japan. Good to see all of our Japanese viewers. Welcome everybody. Good to see you. So we heard from the Bank of Japan today, the BOJ, and there's two central banks that are actually diverging as it relates to monetary policy from pretty much every other central bank in the entire world. And that is the Bank of Japan, and that is in Turkey as well. And they are actually cutting rates. They are making monetary policy more loose, and that is why the Turkish lira today hit an all-time record low again on a relative basis versus other currencies. And the Japanese yen, unfortunately, is also really getting hit hard to the point where the BOJ actually had to intervene and support their own currency because it was falling so much. Yeah, Miguel says $97 is a piece of cake. Compared to New York City, yeah. Compared to New York City, 100%. Loose 72 says, Tom, I bought in South Dakota, Gulf of Mississippi, Arkansas, Montana. I already had some too in Nebraska. Hey, very cool. So Loose 72, are you planning on just holding this land, or are you going to build something on it, or sort of what are your plans on that? Like, I'm trying to figure out your thesis. But that's awesome, man. It seems like a lot of the quote unquote, I guess you could consider it smart money, seems to be buying up a lot of US farmland. Hey, John L. Citadel's Ken Griffin brings billions to Miami with political wins at his back. The Citadel founder, worth $29.6 billion, has ditched Chicago for Wall Street South. Yeah, he probably got a ton of tax breaks and things to move here. John, I think he actually sent me an email about that. But at the end of the day, that should bring, a lot of jobs to the Southern Florida market. But more importantly than just the job growth, it's going to be very lucrative jobs as well, which is good because at the end of the day, one of the downsides, I guess, that I've been hearing ever since I moved to Southern Florida, also a lot of just like debate back and forth between people. Ooh, what was that? Did anybody see that? What was that? Did that fall from somewhere? Or maybe somebody ran it over. What in the heck was that? Anyway, FredEx, beautiful dogs. The biggest, I guess, criticism is that the salaries of the wages here in Southern Florida just don't compare to other parts of the country. So I think as a company like Citadel moving here, hopefully that'll help solve some of the low wages that have been historically paid in places like Southern Florida.
Don't let me down.
Ryan Royal, what's up? Wow, check out the lobby of this building. So this is 1010 Brickell. This looks really nice. Wow, check this out. I'm glad we took this route. We never ever come down here. Look at how unique the lobby looks. I'm assuming this is one of the... I think Dan Zhang is our car guy in the chat, but if I had to guess, it's probably a Ferrari here. Hey, Edson is here. Says, hello, Tom. Awesome music there. Hey, Edson. Good to see you. Happy Friday to all of our viewers in the chat. Hope you guys are well. Hey, NG is here. Hey, NG, what's going on? Billy says, that's where I park my car. Now, how much do you think the insurance costs on something like that, especially in southern Florida, where the flood risk is huge? So we are actually coming up on Brickell City Center. So this is the view of Brickell City Center from the south side. We usually approach it from the north side, but today we are coming up on it from the south. Standing outside of 1010 Brickell. Buff 20 says $5,000. Oh my God, dude. Yeah, I could never afford that. I'll stick to taking the Metro Mover, I guess. Brad's brain's like loud and fast. You know the kind you hate. Hilarious. So a quick, so now that we're coming up on insurance costs, I did just want to note this to everybody, and I think it's quite relevant to the stream. So one of the major issues that we've been seeing in southern Florida, which is a major issue, is that a lot of the private insurance companies are pulling out of southern Florida. All right, so I think if anybody is looking to move down here, or maybe you want to buy a home or a piece of property, I think it's important that, yeah, on the streams, I always talk about the positives in Miami, but I also think it's appropriate and responsible to talk about some of the downsides as well. And one of the things, this hasn't really affected me too much because my homeowner's insurance policy is through a company called Citizens. And Citizens is sort of like, it's pretty much a government subsidized insurance company, right? Now, the problem is, and I'll get into the reasons why. I think these are 2 Lambos for Dan Zhang. So a lot of insurance companies are pulling out of southern Florida, not necessarily because of the flood risk and the hurricane risk and things like that, but over the last decade, there's been massive amounts of insurance fraud as it relates to a lot of the roofing scandals here in southern Florida, which has been really running rampant. So essentially there's been a lot of falsified insurance claims, claiming that people actually need a brand new roof when they don't, which has really almost been bankrupting these insurance companies. So just today, I think one of the last and longest standing insurance companies that have serviced many homeowners here in southern Florida has pulled out, which is now probably going to force everybody to have their policy through Citizens, which is definitely not sustainable over the long term, especially, you know, God forbid, over the next 10 years, if we get a very big hurricane with substantial damage, this could put huge pressures on the state of Florida. So just wanted to briefly throw that out there. I think it's appropriate to talk about the good things and the bad. I do love southern Florida, but you know, a lot of people will email me, hey, I'm looking to buy a house, I'm looking to do this. Just sort of know what you're getting into. I'm not saying it's going to be Armageddon, but you know, it's just something that you need to keep in mind, especially if you're going to buy like a single family home, a duplex, triplex, that Citizens is probably going to be your only option within the next coming years. So just wanted to throw that out there. Hey Zozo Bob's Tom, property insurance has been a problem for all of Florida since Andrew in 1992. Yeah, so the article said that, Zozo Bob, and it said that one of the major things that happened after Andrew is a lot of the roofing insurance fraud. Mike C says, Tom, Florida may go the same route as California did, running their own earthquake insurance. Yeah, so the problem is, again, it's not exclusive to Florida, like Mike C said. Now, I think California is running things a little bit more, I would say, unhinged. Because the problem in California is there's many parts of California where a lot of these single-family home developments or communities are located in areas that are very, very susceptible for high risk for wildfires, brush fires, and things like that. So what happens is a lot of these insurance companies will bring in, scientists, climate change specialists, and they'll build models, right? An insurance company is all about assessing risk. If they can't make a return, they're going to pull out of the market. So in essence, long story short, California is forbidding insurance companies to increase policy premiums based upon potential future increases in risk, which is just ridiculous because it doesn't take a genius to understand the trend that there's been a lot more forest fires and wildfires in California, now than there were 10 years ago, right? And it's probably only going to get worse. So if you don't allow insurance companies to adjust their risk premium based upon future projections, then they're just going to pull out. So yeah, I think it's a big problem in California and in southern Florida too. I think you're right, man. Miguel says, Tom, insurance on a Lamborghini in Florida is $7,600. Holy crap. $7,600 for a house. I mean, $7,600 just to drive your car, just to insure the car. Insane. Hey, Mike 34 says, Tom, $1.5 million apartment in New York City, $849 a year in homeowners insurance. $900,000 a house in Tampa is $3,000. They need to fix insurance here. I think that's a little bit off, Mike. I think the insurance is gonna be a little bit more than $1,000. But I actually think your estimate on that homeowners insurance may be a little bit low for Tampa. Because I'll tell you what mine is. Mine, I think, actually went down a little bit. I think mine is about $3,400 a year. I think. Yeah, I think mine's about $3,400 a year, which is very expensive. I think that is extremely expensive. I have a very, very small property in comparison to what, many, many people have in terms of square footage on a home and things like that. But hey, Tomorrow Today is here. Good to see you. Hey, Andre is here. Says the humidity and hurricane are the only things that keep it from being as expensive as California and the Bay Area. Yeah. The thing with me is I actually don't mind the humidity. I kind of like it humid. I'm a little bit weird. I like it hot all year round. I don't care if it's 90 degrees and humid every day. I just can't stand the winter, and that's sort of why I chose southern Florida over Denver, Colorado, just because I can't stand the snow. Because Denver, Colorado is it's a very up-and-coming tech town, which I was very, very interested in as well. So, but I think the reason why I picked Miami is just because of the weather. I'm just not I just really don't like the snow, to be honest. Mike says, I like dry Nevada and Arizona. Respect. John L says flood zones are a killer. Yeah, I mean, well, thank God my property is not in a flood zone, but at the end of the day, if you buy a piece of property that's not like a condominium that's 80 stories in the sky, I think you're always going to have flood risk in Florida. Blues writer says, Tom, you'd really hate Cleveland. I'm assuming it snows there a ton. If it snows the same amount as like New York City, then yeah, I'd probably not like it. The ABX girl says, humidity is nature's beauty elixir. So the ABX girl, I'd say if you go out in Southern Florida without sunscreen, then maybe you would have inverse effects, but always got to make sure you wear your sunscreen for sure. So now we are entering the Mary Brickell Village. You know, I tried to actually work out of the WeWork building here, out of the KPMG building, but it's always booked out. The only office space that's really ever available is in the 200 Southeast Financial Center. So this particular part of town is way more popular than downtown Miami for whatever reason. Because anytime I try to book a WeWork in this building, you can't, it's just packed. Look at these two, I think these are what, Cocker Spaniel dogs right here? Loose 72 says, yes, some cases government buys your house and land if you live in a high flood zone. Well, that's what they did after Hurricane Sandy in many parts of Long Island, like Island Park and Long Beach, especially in Oceanside too. Because essentially what happened is if you want to build new construction in Island Park, Oceanside, or Long Beach, you need to elevate your house. So you'll actually see these homes are literally on stilts. It has to be within the, I think the FEMA parameters of elevation. So you'll see these houses, they almost look a little bit awkward, where the garage looks awkwardly big, but that's because the building actually has to be built way up off the ground because there was so much damage during Sandy, where some of these homes were literally just washed away. But yeah, it's a good point. You make a really good point. So this is the PF Chang's across the street. Hey, Lettuce is actually Brickell has a pretty notorious flood area. Yeah, I was watching some videos on Twitter, and it was not even like a big rainstorm, and the water was all the way up to the roof of some people's cars, which was wild. Hey, Jimmy, what's up? Yeah, Jimmy's like, those Cocker Spaniels are obviously oblivious of how Fed tried to slow down inflation. So many different ways to skin the cat, and they chose the citizens tortured route. Yeah, I mean, look, I think there's really no winning here in this environment, because at the end of the day, you got to kill off inflation, and if the Fed doesn't raise rates, inflation is just going to continue to ramp. Now, I guess we'll go into that argument because Jimmy makes a good point. I think it's important to discuss that. So the problem is there's a lot of fund managers on Wall Street that are saying the Federal Reserve is evil because they're raising interest rates and it's going to cause unemployment to spike, which is true. However, here's the other side of the token, which I sort of give Fed Chair Jerome Powell a lot of credit for saying this at the FOMC meeting. And this is what Fed Chair Jerome Powell said. He said that the vast majority of people that we're talking to, and when he says the vast majority of people, he means like middle class, everyday working Americans. And he says that the vast majority of the people that they're talking to are really, really suffering from the grips of inflation. So let's just assume that we didn't raise interest rates and we let inflation rip at 8.5% a year. Well, all the people on Wall Street, all the people in Silicon Valley, arguably the people in our government, would it be a little bit of an inconvenience? Yeah, it would. It would be a little bit of an inconvenience. But could they survive it? Yeah, you probably could survive that. You could probably survive 9% inflation every year if you work on Wall Street or you work in tech or you even work in the government. Yeah, probably. But what about the people that are retirees that are living on a fixed income? You think you could survive 9% inflation? Probably not. Let's say if you have a family budget where you spend $450 a month on groceries and your grocery bill is going up 20% a year and you live on a fixed income. Can you survive that? No, in 2 years you're toast. So what Fed Chair Jerome Powell was saying is we can't afford not to raise rates. Because if we don't raise rates, we are going to put in extreme pain on the average working class American. And which to that I say I agree. You know, artificially suppressed rates and easy monetary policy since the lows of 2008 has created this societal wealth gap and this two-tier society, as I like to call it, of extreme haves and extreme have-nots. So if you continue to print money and provide economic stimulus, not only is inflation going to ramp in terms of shelter inflation, in terms of food inflation, wage inflation, but asset price inflation is also going to ramp. And the problem with that is the vast majority of people who own assets in the United States are the top 10%, 10 to 1%. So if you have the S&P, the NASDAQ, the Dow Jones Industrial Average, and commercial and residential real estate going up at a 20% clip year over year, well, you are essentially going to make the top 10% of Americans unbelievably ungodly wealthy. And you are going to price the middle class and the lower class out of the market into acquiring those assets. Now, if we look at the statistics and we break it down even further, if you look at a study of first-generation millionaires in America, which means people who have made, oh, look at these two dogs. Which means people who have made money on their own, right? Achieved millionaire status on their own, not inheriting it from a family member, something like that. The way they have built their first 1 million in net worth, the vast majority of them, is through equity in a piece of property. And if you have the median home in America, single family home in America selling for $425,000, do you think that's normally sustainable? Probably not. So on one hand, the Fed, I agree that they need to raise rates to kill inflation, to help out the average everyday American. And the consequence to that is asset prices are going to get hammered, right? Which means the S&P 500 equities are going to come down, home values are going to come down, but then on the other side, unemployment is probably going to go up, right? So there's no easy way out of this, right? When we've entered into this perpetual debt cycle, you're going to have to pay the price either way. You can't have your cake and eat it too. So I don't think all of the blame is necessarily on the Fed, in my view. Hey, Andre is here. Good to see you, Andre. We are now here on Southwest 1st Street on the west side of Brickell. Almbeck 85 says, belated response, but I live in Cleveland and hate the lack of snow lately. 2 warm winters with sleet and rain rather than sleet powdered snow. So I would say if I had a choice between having it snowing every day or raining every day, I'd probably choose the snow. Just because the rain every day is kind of miserable, to be honest. But Jimmy, good to see you, man, and happy Friday. Thank you for tuning in on the live stream. Hey, Charles Collins in action, says Tom, it has been proven that most of the forest fires in California were started by green flag waiver activists. As a scientist, I know that rising in air temperatures cannot ignite biomatter in the forest. Well, I guess I can't argue with you, Charles, because I'm not a scientist, so I'm gonna take your word for it, dude. I'm not gonna argue with that. Brad's Brains says, Tom, brilliant point. Brilliant point. Oh, look, the dogs. You know what I haven't seen? And let me know if you guys agree with this. Because a lot of the times when I'm streaming, I kind of zone out. So I really don't see my surroundings too much. Wow, that plane is flying really low. I never ever see anybody with a beagle. I never see anybody that has a beagle. And that's sort of disheartening because beagles are the best dogs to have. Probably second to like a yellow lab or a chocolate lab or something like that. I think it goes yellow lab, chocolate lab, and then beagle. Those are like the top three dogs ever. Maybe a hot take. Maybe a hot take. Hey, Sabrina Fair, thank you for joining. Good to see you. Somebody says, Tom, go to the basketball court. Yeah, I'm not a big basketball player. I think I would embarrass myself. Gregory, what's up? Says agreed. Good to see you, Gregory. Check out the balconies on this apartment. But if you guys are enjoying the live stream so far, feel free to hit the like button and subscribe to the channel if you are new. We do these streams back and forth between New York City and Miami, Florida, roughly 5 days a week. And we'd love to have you a part of those streams. So let's enter Brickell City Center. I never really walked through this place, at least on this side. Yeah, Ryan Royal is like, I'm surprised we haven't seen an alligator on a leash. Do you guys want to know a true story? And this is not made up, this is a true story. The first time I saw an alligator on a leash was on the A train. This was when I was a freshman in college. This was one of the first times I took the subway to school. I walk on with one of my friends. We're taking the A train from Penn Station up to 59th Street. And there's an alligator on the leash on the A train. True story. So the Apple Store is on the second floor. So we'll do some impromptu market research here because I went to this Apple Store yesterday to buy one of those adapters for the microphone. And turns out I bought the wrong adapter. So we are still streaming without the mic. So I think tomorrow I have to come back here and return it. So instead of buying the lightning port to the headphone jack adapter, I bought a USB-C adapter instead. So we'll see if it's packed here in the Apple Store. When I bought the adapter earlier this week, it was absolutely packed. Oh, I think it's closed. Yeah, it's closed, but this place is always packed. If you want to even buy like a little charger or adapter, it's always going to be a 30-minute wait. This place is overflowing with people all the time. I'll give you an aerial view of the Saks Fifth Avenue. Sabrina Fair, good to see you. Chris Beeman. Strider, good to see you. Gregory said, did it have a muzzle? No, it didn't. It was quite small. It wasn't like an actual massive alligator. It was probably about the size of one of these koi fish here in the pond. Buff 20 says, Tom, you could buy Apple products at Walmart if you really need it. Yeah, so one of the reasons is the WeWork is close to here, and there's really no Walmart in downtown Miami or Brickell, but who knows. Sally is here, good to see you. So I think someone's calling me, hold on. I think we're back now. Hey, Siva says, hey, Tom from India. Good to see all of our viewers from India. Good to see you. Yeah, anytime somebody calls me, we have the stream start to buffer, so I apologize for that. So obviously, one of the things we were talking about tonight, and we'll just quickly review it, is this perpetuating situation of the strength in the US dollar, right? So one of the things that we're seeing is that the Federal Reserve has to raise interest rates to try to kill off inflation, okay? But while they're doing that, they're making US-based debt more attractive, right? Because now it's yielding a higher yield. So in turn, what that does is it sucks liquidity or sucks capital from all over the world, because many investors, many global investors are like, wow, the US has a lot higher yielding investments than I do in my country. Let me go pile into that. And that pushes up the price of the dollar even more. Now, here's the problem. As the dollar starts to strengthen, a lot of emerging market currencies start to get extremely devalued and loses purchasing power versus the US dollar. Now, this is a problem for two reasons. The first reason is a lot of emerging market countries and companies have substantial dollar denominated debt, okay? So if you're an emerging market company and you have substantial dollar denominated debt and you do not have that much US dollar reserves, well, you're gonna have to dip into your native currency to pay off your dollar denominated debt. The bad thing about that is your native currency now purchases that much less US dollars, which is almost like a never-ending cycle. So in order for a lot of these emerging market countries to protect their own currencies, they in turn have to raise their rates as well to be competitive, which starts to tighten monetary policy not only in the United States but globally, making markets very illiquid and crushing asset prices. And this is why we've seen US equity markets and especially emerging markets in free fall, and especially a lot of these currencies around the world as it relates to the US dollar are just degrading right before our eyes. I think the Turkish lira hit a new all-time low today. The Japanese yen was in such a free fall where the Bank of Japan actually had to step in and save their currency from being so devalued. So I think this is a trend we need to watch. As the US dollar continues to strengthen, it's gonna put a lot of pressure on emerging markets. So if you have exposure to emerging markets, I think as earnings season rolls around, I think you're gonna see a substantial hit to earnings due to currency exchange rates. Hey, Della says, great view, good to see you. Yeah, Grand Street says €1 equals 97 cents on the dollar. There's a ton of traffic going down here. Kevin Ramsey, welcome. Now, another thing that I wanted to add is if we notice during power hour, so power hour is usually, obviously 3 o'clock to 4 o'clock when the market is about to close. So S&P 500, the NASDAQ, and the Dow Jones Industrial Average were melting down all day. The Dow Jones Industrial Average blasted through their June lows. The S&P 500 tested its June low, and so did the NASDAQ composite. But did you notice that 10-year US Treasury yield? At one point today, the bond market was melting down so much that the 10-year US Treasury yield ripped all the way to 3.8%. But what happened at the last 30 minutes of trading for the day? Well, what happened was you saw a massive, massive bid in the bond market. Somebody was getting in there and buying US Treasuries, and I can't really say with certainty who I think that is, but I think everybody pretty much knows. I think that the Federal Reserve is watching this, and they probably got in here and bought some of the debt, which put pressure on that 10-year US Treasury yield. I think we're now all the way back down to 3.6, and stocks actually rallied a little bit, materially off their lows. But I don't think the bottom's in. I think we're going to still have continued pressure on stocks until the Fed stops raising rates. So I think we just need to sit back, relax, and not fight the Fed. Jules says, Tom, Pakistan is needing a bailout. China's loan default is coming. Well, I think the IMF, or the International Monetary Fund, is already getting involved here in some cases. Allegedly. Lizzie says, are they talking about laying people off? Well, okay, Lizzie, let's talk about that. I'm glad you brought that up. So if you guys follow me on Twitter, if you follow @WalksWallStreet, I was talking to a fund manager on Twitter by the name of Ross Gerber. So Ross Gerber is very famous for being one of the earliest Tesla bulls. So him and Ron Barron were really the two people that were having extreme sizable positions in Tesla before it was quite fashionable. And so one of the things that I had asked Ross is, I said, because he made a tweet, essentially the tweet that he said was, the S&P 500 right now is trading for about 14 times projected forward earnings. And I responded to that tweet. I'm like, yeah, that's all well and good, but do you think that earnings revisions are going to continue to go down? And this is what he said. And this is coming from a pretty notable fund manager. Now, I know he's a very controversial guy, but this is what he said. He said, from a lot of the companies that we're talking to, what they want to start doing is, or what they're planning to do is to protect their earnings, is to start laying off employees. So what does that mean? So before they would ever allow their earnings to take a material hit, they would start to trim the fat in almost every aspect of the organization. Now, this isn't a guarantee that earnings won't take a hit, but I think it's going to postpone things for at least a quarter or two. And we're already seeing this as it relates to Meta. Mark Zuckerberg's company is announcing massive layoffs. I think Netflix is announcing salary reductions. So across the board here, we are probably going to see a wave of layoffs, because a corporation's job is to protect profits. At the end of the day, you could argue if that's the right thing to do or the wrong thing to do, but that's the reality, right? Their job is to return shareholder value to investors. And in order to keep earnings intact, they need to trim the fat, and they're going to start to lay people off. So I think that's going to be step one. So to your point, Lizzie, do I think there's going to be layoffs? I do. I think there's probably going to be a lot more jobs being cut, unfortunately, as we move through at least Q1 and Q2 of 2023. Hey Tariq, good to see you, my friend. I don't think we've ever been to the third floor of this building. Zozo Bob says, Tom, this mall was modeled after a mall in Singapore. Was it really? It's definitely unique. It's sort of like an indoor-outdoor type experience. Hey, Road Dog. This is Tom. I see people leaving good jobs for bad ones right now. What do you mean by that? Could you expand on that a little bit? I'm curious. But if you guys are interested in some of the things we talk about in the live streams, if you scan the QR code on your screen and punch in your email, I write a free investing newsletter, usually every other Tuesday after the market closes, where I cover not only the US equity markets, but emerging markets, fixed income, and real estate. So if you scan the QR code on your screen and punch in your email, you will receive that for free. It's a good way to keep in touch with us here on the live stream. Hey, Karib Shaq says hello from Virginia Beach. Welcome everybody from Virginia. We are here in Brickell, Miami. We're actually gonna head back over to downtown Miami, where I have to get the bus to go home. Lizzie says, are credit card rates going up? Yeah, absolutely. And so in an environment where interest rates are rising, I would really advise everybody, well, technically I can't advise, but if I had to, just talking amongst friends here, I would really try to keep your credit card debt to a minimum. And I would definitely not carry a balance on any type of credit cards. Now, you shouldn't be doing that anyway. But in an environment where interest rates are going up, I think the average, if we think all the way back to March, I think the average rate on a credit card was about 16%. Since the Fed has been consecutively raising interest rates in 75 basis point increments, I believe the average credit card rate, or the interest rate on a credit card now, is almost 18%. Now, some could be more and some could be less, right, depending on credit. But you really got to pay attention here, because if you're holding a balance on your credit card and maybe you're paying only your minimum payments, well, as that rate goes up, you know, your minimum payment's going to go up. And if you're living on a fixed income, that could spell some trouble for you. So definitely just be cognizant of that. Lizzie says, Tom, I had to pay all mine off to get my home loan. Okay, so Road Dogs is hard work, worse company, same pay, but it's closer to home. Mike says, you need to pay your credit card off every month and not use it as a line of credit. Agreed. Agreed, Mike. Now, today was an absolutely beautiful day in Miami. Probably one of the most picture-perfect days I've seen, which is getting me a little worried because we have a big storm brewing, which I believe right now is over the Cayman Islands. Now, supposedly when it makes landfall here in Miami, it should be about, I think, a Category 3 storm, which is definitely concerning me a bit, because this is gonna be my first tropical storm / hurricane ever. So we'll see. Jules says, Tom, get some cash out for the hurricane in case we lose power for a few days. Yeah, so Jules, tomorrow I'm actually gonna be, so tomorrow there may be no live stream depending on if I can get my stuff situated. I'm going to rent a car. I'm gonna go to Costco, load up on some stuff. I'm not gonna go crazy, but just get some water, get some food, just in case the power does go out. I don't wanna, not have nothing, so. I'm just gonna get some stuff at Costco. Nothing too crazy, but. Hey, Devin McLean says, hey Tom, just subscribe to the newsletter. Thank you, Devin. So you'll notice if you look at all the archives in the newsletter, you could go back and read all the ones I've written. Now, I haven't written one in quite some time. That is because I had a lot of big events at work, but I have a big update, so I'm gonna have a lot more free time now that some bigger deals have closed, but they will be coming out soon. Hey Lizzie, thank you so much for the $10 donation. I appreciate you very, very much. Thank you so much for the support of the channel. Which way do we gotta go here? We gotta go the other way. I'm going the wrong way. But Lizzie, thank you so much. Once again, thank you for your donation. Sheriff Brothers says, are you an accountant, sir? I am not an accountant. My day job, I am in enterprise software sales or tech sales. So I sell software and hardware into the Fortune 500, Global 2000. 925 says, yeah, that storm you're talking about is currently a tropical depression. It will be named Ian once it becomes a hurricane. It would be a category 3 or 4 once it hits here in Miami. Dude, that's freaking me out, man. No, I'm not from Miami, so I'm not familiar with hurricanes, but man, dude, I really hope it's not category 4, because that's gonna do some major damage if that's the case. This looks like maybe a nightclub, perhaps? I think this is one of those Rolls-Royce SUVs. These are really cool. Hey, Mario says, hey, you should stream during the storm. No way, dude. Yeah, should I be one of those guys from the Weather Channel that over-exacerbates the effects of the storm? I think that's going to be a little bit too... Yeah, assuming we get a hurricane, everybody, on Wednesday, just assume that there's going to be no live stream. I hope you guys can understand. I definitely don't want to be walking around in my first hurricane in Miami. Look, prepare for the worst and I guess hope for the best, right? I have the hurricane shutters on my house. I mean, my house, this is sort of the way that I cope with myself. I say, all right, my house was built in 1955 and it's still there on the same block in Miami. So that means it's been through quite a bit of hurricanes. So it's still there. It's probably still going to be here through this one. You know, could there be minor damage or some damage? Yeah, sure. But, you know, I guess that's why I pay crazy amount of money in insurance. Yeah, Ryan Royals like, stay out of the sea. Don't make any unnecessary journeys. Yeah, I'm definitely not. I'm probably not even going to come to the office that day. I'm probably just going to work from home. Yeah, Gina Thomas says, you'll be fine. You will learn they're not always as bad as you think. Yeah, I mean, look, I've been through Hurricane Sandy, but sort of as I was explaining before, the thing about Sandy, for any New Yorkers in the chat, Sandy wasn't like super high winds. The problem was the storm surge, right? Now, in a category 3 hurricane, the wind is probably, what, 100 miles an hour? We didn't really have that during Hurricane Sandy. So the majority of the destruction on Long Island and in New Jersey, Queens, all that, Lower Manhattan, it was because of the storm surge. We had massive amount of flooding, so a little bit different. Yeah, Kevin Ramsey says, be careful, man, I would leave. No, I'm gonna be in Miami for probably 2 weeks, two and a half, maybe 3 weeks, maybe a month. So I'll be here for quite some time. Dan says, Tom, I remember Hurricane Sandy, my old school Stony Brook, lost power. Glad I was in Queens at the time. Yeah, I mean, the eastern end of Long Island got hit pretty hard. South Shore Long Island, like Long Beach, Island Park, Oceanside, Massapequa Shores were hit pretty hard. So, I mean, I was there for the cleanup. I was in Oceanside doing some cleanup. My uncle's house was totally obliterated. Yeah, it was not a good time. Grand Street says 3/4 Hoboken was flooded from the surge. Storm surge. Yeah, the storm surge is horrible, man. That's really what gets you. Wow, 925 says, Tom, my great-grandmother is 91. She's been through everything imaginable. I have her mindset, just sit back, relax, and wait for it to pass. That's true. And look, if the power goes out, it's not that big of a deal. I won't have AC for like a week. You know, whatever, doesn't matter. Oh, Buff 20, is that true? Sandy was only a tropical storm when it came? Was that true? I didn't know that, actually. I'm trying to think. The LT Prod, good to see you. Abby wants to get a flashlight. I have all that stuff. The only thing I don't have is food, because I'm really not used to cooking that much. In New York, I just eat in the city. So if you look at my refrigerator right now, it's totally empty. Totally bare empty. So that's not good. So I'm just gonna buy some water, all that good stuff, but Line Sync says, Tom, do you have plenty of batteries, rechargeable, disposable, candles, power bank for the phone, laptop, etc.? Yeah, I'm gonna load up on that tomorrow. I'm gonna rent a car and get all that stuff. The biggest thing that I hear is you just gotta load up on water. Because if there's no water, you can't flush toilets, things like that, so you gotta get... Look, hopefully it won't be that bad. Hopefully I'm just gonna be over-preparing. But I think since I purchased this place, I should be getting all that stuff anyway. I'm gonna buy a generator, Generac generator, keep it in the shed, just in case we have more hurricanes, which there will be. Rob K says, fill your bathtub. So I don't have bathtubs in my house. I only have showers. All right, team. I want to thank all of you for coming out to the live stream tonight. I think we covered a lot. We talked about a lot. Anything from monetary policy, fiscal policy. We talked about treasury yields, the bond market, stock market, all that good stuff. And we even talked about hurricane preparedness. So I want you guys to have a fantastic weekend. Get out there, enjoy it, especially if you're in Miami. It's gonna be a beautiful weekend. Prepare for the hurricane, stay safe. We should be live tomorrow. I'm gonna give it like a 50% chance of being live tomorrow. But if not, everybody have a fantastic weekend. Please get some rest. And we will see you in the next one. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Please hit the like button, subscribe to the channel if you are new, and I will see all of you tomorrow, maybe Sunday 100%. So we're gonna give tomorrow like a 50% probability, Sunday 100%. Everybody enjoy your weekend, and we'll see you tomorrow. Stay safe, everybody. Thank you so much for coming out.